Hello and welcome to another technical analysis tutorial on this YouTube channel. So far on this channel we've talked a lot about different indicators and oscillators in trading and when doing technical analysis. We also talked about candlesticks in general and I think about patterns in general as well. But what we really want to do now is to dive a little bit deeper into different patterns, and I think I've covered the most important indicators so far on this channel, and you can go back and watch all of these short tutorials, which will then step by step help you to understand more about technical analysis. So I really want to start talking about patterns because they can really reveal the potential next moves, and they are really important, especially if you are like a breakout trader, but also if you want to predict what could happen next. And a lot of people who don't understand technical analysis, just always sort of talk about, can you really predict the next moves just because of a stupid shape? But yes, it's not 100%, of course not, but some of these are quite reliable. And what I always encourage anyone to do is to try to understand the context as well, and also the reasons behind why such a pattern is forming, because it's not just let's call it a stupid pattern on a chart. They form because there is something happening behind the scenes between sellers and buyers, and that is what is so important to understand. So let's take a look at this chart. What we have here is, and what I want to cover first, because we really need to do it step by step. A lot of you guys probably have never heard about technical analysis and want to get into it from a beginner point of view. So let's start. The first pattern I really want to cover, and these are some of the most reliable patterns anyway, they are wedges. And these wedges, sometimes referred to as triangles, or sometimes also referred to as flags, for example, bull or bear flags. But these really all base on wedges. And a wedge is what you can see here. So where you have two lines that are leading into, that are basically moving towards each other at an angle in a diagonal way, and they basically lead the price action into an apex. What we can see here, this is a so-called descending triangle where both of the lines are going down. But what is very important is to see that the lower line, which is the support line, is going down less steep compared to the higher line, right? So that is a descending wedge, where the higher the resistance line is steeper than the support line. And what does that really tell us about the market? Well, we can see here if we look at the context, and that's always important to understand the context. Never only look at one indicator or one pattern, but as soon as you can take, for example, moving averages, price action and patterns into account, then you can get a really clear picture. So we've come from a really strong downward move. We've then seen a slight recovery, but what we can see now is that we're in a pretty strong downtrend, I would say. From down here, we've got a downtrend. Now, what does that really mean? This wedge now basically tells us that while the price is moving down, the downtrend is really losing momentum, okay? Because what happens essentially is that the top resistance line, we can see we make lower highs and we make lower lows, but the downtrend is beginning to slow down. And the reason the downtrend is beginning to slow down is because the sellers can't push the price down much more. So the sellers have more and more difficulties to push the price further down. So you make a lower low here, yes, and then another lower low. But the price difference between that lower low and that lower low is lower than the price difference from that lower low to that previous lower low. So it's getting extremely difficult and more difficult for sellers to push the price further down, while buyers still have difficulties to push the price up. So the highs are still going down at a faster rate, but the lows are really starting to, the sellers really have difficulties to push the lows further down. So, and that is a strong indication that a trend reversal could be coming, or that at least a breakout to the upside is likely. And that is exactly what happened here. So exactly a few things coming together here. You can see, and that is exactly also what you would see on the RSI. You would see that downtrend slowing down. You might even see a bullish divergence here forming. So you have a few things coming together here. So you've got that descending wedge, and then when you can see that there's basically there's actually a higher low forming. So we make lower lows here, and then the first time here, and that really gives you a heads up. So the first heads up is the descending wedge. The second heads up is that we are making a higher low here. Can you see that we're making a higher low? From that to that, that's a higher low. And that often happens that you test that resistance line, then there's still another pullback, or basically we can't get through, we can't do the breakout, but then the sellers can't push it away at all anymore, and then there is a breakout. So that really gives you a heads up. That was still in the end sort of you could call it a fake out. Even though we managed to break out above, we couldn't really get through, and that is why I always say take context into account, because what you can see, we continue to do the downtrend, at least for a little while. And I always say take the context into account, because where are we with regards to the moving averages? We are still below moving averages. So having a descending wedge breakout to the upside and we are still below moving averages, it's a bit tricky, because it indicates we are still sort of in a downtrend. And I always encourage people to trade with the trend, and we would go against the trend here. However, it is a first indicator that a trend reversal could be coming. Then you can see here a very strong indicator that a trend reversal is coming. There is the descending wedge was basically the first one. People could have traded this, make a bit of profit, but of course, we were struggling to keep the trend to the upside. But then here another very, very strong signal where you have actually that pin bar to the downside. Very strong rejection on one day, or that was actually on the 4-hour chart, and then from there we managed to get to higher prices again and start to reverse the trend. We then have another descending wedge here, and you can see that here clearly. At least I always say we need 3 touches, because you can always connect 2 points on a chart, but we have 3 touches here. And again, the same thing happening here with that descending wedge. The resistance line is steeper than the support line. Buyers are finding it more and more difficult to push the price further down. There was one attempted breakout to the downside, which can always happen. These are not guaranteed to work out, but an attempted breakout to the downside happened. And this then, because that failed, that could have given you the very first or the final heads up that a breakout to the upside is coming, because that was a very, very strong rejection by buyers here. Yeah, so the sellers couldn't push the price further down, not below that $1.02 price, they couldn't. So, and you have this descending wedge. So a failed breakout to the downside oftentimes indicates that then a reversal could be happening and we could head to a move to the upside. And that is then what happened. That was really the last thing that led to a trend reversal here. So the descending wedge coupled with the failed breakout to the downside, and then you could see that that breakout to the upside, and also a retest. We had a red candle here. The retest was successfully, so that former resistance level was flipped to a support level, and we continued our way to the upside. And how do you then work out, when is the next breakout? Well, clearly here you have this very clear shape, and clearly here at the, well, do you call it neckline? Possibly. You have this very clear breakout to the upside then. Yeah, so that's what happened, and that's how you can use descending wedges. We've got the opposite as well. We've got an ascending wedge, which works exactly the other way around in an uptrend. And by the way, you can clearly see here, as I said, where we were starting to move above the moving averages as well. So that is critical. What we have here is now an ascending wedge, so that works the other way around. You've got an ascending wedge, which exactly tells you the opposite thing, where buyers are starting to find it more difficult to push the price further up. We're still making higher highs and higher lows, but the highs are really getting not lower, but less high compared to the previous one. So that was a first indicator that a trend reversal could be coming. And then you can see we broke that line, that lower line, we retested it, couldn't get back in, and then we bounced off that, and trend to the downside started to emerge. So these are basically ascending and descending wedges. In summary, a descending wedge, or wedges in general, are reversal patterns. So a descending wedge can indicate that we are going to break to the upside and that we are going to losing momentum in a downtrend. And the ascending wedge indicates that we are losing momentum in an uptrend, and that again a trend reversal could be coming. Some of my favorite patterns really, and I always watch out for these, and they become quite easy to spot after a while. So hopefully that was useful. If you liked that update and that tutorial, please let me know in the comments if you liked it. Please also hit the like button and subscribe for further technical analysis tutorials. Thanks a lot for watching and see you in the next video. Bye.